please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Power Breakfast. We are in the Mumbai News Centre. I'm Nigel D'Souza, and with me is Ekta Batra. Hey Ekta, good morning. Good to see you back.
Hi Nigel. Well, morning. We have a busy week ahead of us, and as well as today in terms of a lot of earning reactions. But through the week, we have some heavy numbers coming out from the Nifty.
That's right, Ekta. It's good you took a couple of days off before, in fact, it's going to get quite busy this week, and even next week it's going to really pick up from here.
Yes, absolutely. And talking about pharmaceuticals, we have Biocon, Syngene, and not to mention that big Fortis board meet. Well, back home on Dalal Street on Friday, the Nifty ended just 1 point in the red, while the Sensex closed 11 points lower. So overall, it was just about a flat close for the markets. The mid-cap index mildly underperformed with cuts of about 0.3%, while the Bank Nifty saw a bigger fall of 0.75%. So overall, Nigel, how are we set up for today?
Well, Ekta, the last 1 month or so, the Nifty has moved so well from around 10,000 to around 10,500 odd. And that's quite encouraging because otherwise, the pieces of the puzzle are not falling in place. You take a look at the 10-year yield for the Nifty. Just, at the start of this particular month, we were at around 7.12, 7.13. Now, in fact, the 10-year yield has moved all the way to around 7.7%. So, you should pull that up as well. The bond yield, that's the US bond yield as well. That, in fact, has moved to the highest levels we have seen since 2014. So clearly, the yields have been inching up, which is normally not a very good sign for emerging markets, particularly like ours. Brent crude prices as well have done a rally of more than 10 to around 12 from the lows that we have seen earlier this month itself. And in the past week, well, the Nifty was a Shanghai market which was down 2.8%, while other markets did well. So is that Chinese market worry coming back to haunt us? We'll have to keep an eye out on that front. But in Friday's trading session, TCS, that was the big star. If not for TCS, it would have been down closer around 20-25 points odd, because single-handedly it pulled the Nifty up by around 27 points and we ended more or less flattish. Well, and the market capitalization that is added by TCS just in the last 1 year is 2.2 lakh. To put that into context, that's 85% of Infosys' total market cap. It's more than 1.5 times HCL Tech's market cap, and in fact, in terms of Wipro as well, more than 1.5 times. And just the market cap added for TCS is nearly 3 times Tech Mahindra's total market cap. So that's telling you the kind of star that TCS has been in the last 1 year. And I'll guess that a lot of institution buying would have been there in TCS because it ended virtually at the high point of the day. Net, well, the institutions, they were buyers. The DI is bought. The FI number, it appears it's a net sale of only around 21 crores, but there could have been some delivery-based buying for TCS, and that's why, in fact, that number appears a tad bit smaller. For the past week itself, the FIs were sellers, the DIs were buyers, net institutions, in fact, they were sellers in the past week. The live indicator that we have is the Nifty futures premium in terms of the futures and options market. Well, that premium did expand, telling you there were some longs that were added. The FIs added close to around 2 longs for every 1 short. They bought more number of calls. They wrote some puts as well in Friday's trading session. And from the start of the series, FIs have added way more, longs than shorts. In fact, they've added close to around 6 longs for just 1 short from the start of this series. That's really how the dynamics are playing out. We should pull up that chart again. The long positions now at around 39%, which compares with around 18% at the start of the series. Well, in terms of levels, what are we looking at? The highest open interest on the put side is at around 10,500, so we'll be watching out for that mark on the downside. On the upside, though, 10,700 call, that has the highest open interest, so we'll keep an eye out on that. And technically, in fact, we're doing quite well because we're trading above all the crucial technical levels. Just one more point, we've been talking about market cap. In the last couple of trading sessions, Apple, that's a US listed stock, it's lost close to around 7-8% of its market cap. That's 60 billion USD.
Wow.
Now, to put that into a perspective, that's that's more than what Infosys' market cap is. In fact, it's close to around 1.6 times Infosys' market cap. Only talk about the market cap lost, and it's 25% of India's GDP. So I just thought I'd put that point out for our viewers as well.
Okay, and what about stocks?
Well, plenty of earnings, as you said, Ekta. So it's going to be a busy week. We have a lot of nifty stocks that will be coming out with the set of numbers: Bharti Infratel, Bharti Airtel. We'll have Ultratech, Wipro. watch out for all those stocks all of this week. Maruti Suzuki as well comes up with its set of numbers. So we'll keep an eye out on those stocks for the remainder of this week. For today, though, we'll be watching out for Bharat Financial. We'll have Delta Corp as well that comes out with a set of numbers, and LIC Housing as well as Reliance Infra. So those are the results that we're expecting today. Numbers that came over the weekend: India Bulls Housing Finance, loan book growth was good. Only thing is that, in fact, there was some compression in terms of the spreads. So we'll have to keep an eye out on those numbers. CLSA says, we need to keep an eye out on the spreads. That's going to be important for the stock to continue the run that we have seen. HDFC Bank, well, that's a rock solid performer. Loan growth of around 19-20% on. You can't really fault that bank. And NIMs as well remain stable at around 4.3%. Couple of other numbers. CDSL, well, margins, some compression, though in absolute terms there was a growth of more than 50%. Unichem Laboratories, we had the US FDA that concluded an inspection as its Ghaziabad facility. No observations there, so keep an eye out on that stock. Indian Hume Pipe, they won an order of around 580 crores odd, so that stock in fact should be in focus. And Phoenix Mills, well, they have acquired a property in Bengaluru for around 650 crores. So we'll keep an eye out on that stock. And from the futures and options space, a stock that's gone into F&O ban is DHFL. So we'll watch out for that one. And a stock that's come out of the F&O ban, that's IRB Infra. So we'll have to keep an eye out on that stock as well. SGX Nifty currently is indicating a cut of around 50 points. Let's see whether or not it starts off anywhere close to that number. I reckon it'll be around a 10 to around 20 point downtake to kickstart trading.
Well, on to earnings now. HDFC Bank reported what was a strong set of numbers this quarter. Abhishek is here with all of the details. Abhishek, morning, over to you.
Good morning, Ekta. So if you look at the numbers, they look really good. Look at the deposit growth now. That has come in at 22.5%. What that impacts is that improves the liquidity coverage ratio for the banks, which had crossed 90% level, should now come back to 83-84% level and provide cushion for loan growth ahead. The core fee income growth, now that surprised on the positive front, growing at 32% on a YOY basis and around 16% on a sequential basis. This is despite the fact that the loan growth was at just 19%. So what aided in the core fee was the retail portfolio, which actually grew by 28% on a YOY basis. The slippages also declined by 45% on a quarter-on-quarter. That led to annualized slippage ratio being the lowest in last 5 quarters. You look at the annualized slippage ratio, it is at 1.7, and that compares to 3.2 in the previous quarter. Asset quality due to lower slippages remains stable at 1.3% gross NPA versus 1.29. The key highlight being that the provision coverage ratio has now improved to around 70%. So annualized credit cost, owing to the fact that slippages were the lowest in last 5 quarters, came down and was on the lower side in last 5 quarters. So loan growth is a bit lower at 19%, given the fact that last 3 quarters it has been at 20% plus. One key highlight that I would like to mention is that HDFC Bank always acts as a precursor to any decline in loan growth. So if the corporate portfolio has not grown significantly, does that mean that profitable growth in corporate portfolio is over for banking industry? That needs to be seen going ahead. So NII came in at 18% growth, while net profit grew by 20%. The brokerages have maintained the positive stand on HDFC Bank. CLSA has increased the target price. Prabhudas Lilladher has also increased the target price. Only Kotak Securities is not happy with the kind of valuation that HDFC Bank is getting. Back to you.
Okay, all right, Abhishek, we'll come to you for India Bulls Housing Finance as well. For the time being, let's hear out what a couple of experts made of HDFC Bank's numbers.
Net NPAs not just remain the same, they're probably slightly softer. So gross NPAs is fine, is probably higher by about 400 crores, if I'm not mistaken. But net NPAs is not at all a worrisome area. I think people will understand the fact that credit growth in a scenario where very few banks, I think barring HDFC, Kotak, Indus, there's hardly anybody which is really growing at all. So this seems to be the natural course of market share improvement for some of these banks. And that will be dramatic in the next couple of quarters. So you can see market share improvement and hence absolute credit growth and net interest income growth, not maybe necessarily margin. So I wouldn't be very worried about it.
I think the bottom line number is almost in line with what I expected. And even on the asset quality also has been fairly stable. If you look at quarter on quarter, it has hardly changed on the gross level. And on net level, rather, it has been kind of improved. And provisioning number, as far as I was expecting, it has been almost in line with expectation. That means they have been able to maintain the credit cost. On the loan front, probably they could have, maybe, I was expecting that being a fourth quarter, they could have done little better on that front. But asset quality is definitely a very kind of, stable set of numbers, so not a issue from that point of view.
Okay, so that's on HDFC Bank. But the other company in focus would be Indiabulls Housing Finance, which posted a stable set of numbers this quarter. Their net profit was up almost 23%. Asset quality was largely in line as well. Abhishek, tell us more about that.
Well, Ekta, the loan growth is the best part about Indiabulls Housing Finance, but that has come at a cost. I'll explain how. The loan growth at 34.3% is the highest in last 7 quarters, but the spreads are at the low point. Why? Because the yield is under pressure. You look at the yields have declined for Indiabulls Housing Finance. So the management guidance has always been that, they'll maintain their spreads between 3.2 to 3.25%, but this time it has come in at 3.11%, and that is owing to the decline in yields, and therefore earnings have missed the estimates by large. So if you asset quality has largely remained stable with gross NPA at 0.77% versus 0.77% in the previous quarter. So NII has grown by 22% on a YOY basis, while net profit has grown by 22.5% on a YOY basis. Back to you.
Okay, all right, Abhishek. Thanks so much for giving us details of both Indiabulls Housing Finance as well as HDFC Bank. Well, and some key earnings to watch out for in today's trading session, LIC Housing Finance. That's going to be the stock in focus as well. On the back, we'll be watching out for those numbers. Abhishek, what are you expecting there?
So, Nigel, to begin, LIC has not been growing its book in a profitable manner. If you look at the last 11 quarters, while the loan growth has been at around 15 to 18%, the margins have come under pressure. So, loan growth above 15% will be very positive. You look at the net interest margin over there, an improvement will be positive. But we have seen, yields increasing over the last 6 months. So, that will be seen very closely. Asset quality, the gross NPA below 1% will be positive. It has largely remained stable for them, barring a slight hiccup in the previous quarter. And as I mentioned, the yields have actually risen. So what that impacts in terms of the cost of funds will be seen very closely. Our polls suggest an NII growth of close to NII growth to decline, in fact, on a YOY basis to 3.2% by 3.2%, while net profit to largely remain around flattish level. Back to you.